Ethan, back at the whiteboard, and in today's video, I want to teach you how to invest $1,000 and the question that you should ask yourself when making that decision. So the first thing you have to ask yourself is, what is the most important investment you can make today that's going to get you to where you want to be in the next 3 to 5 years? Now, why 3 to 5 years? 3 to 5 years is just enough time to accomplish those goals, but also a short enough time to where you could adjust later on because, as you get older, your priorities change and the goals that you want to pursue change. And so 3 to 5 years is a good time horizon. So what I've done is I've divided this into two sections: accumulation and purpose. Now here, accumulation is the sole sake of investing money to accumulate more money on the other end, while purpose is investing money typically in yourself to develop a skill, a skill or education to be able to generate more money for yourself later on. So first, let's jump into accumulation. So you can do this a couple ways. You have stocks, bonds, indexes, precious metals, cryptocurrency, real estate, the list goes on and on. And typically these operate along the lines of risk. Now, this isn't ordered in any specific way, but you have to ask yourself, what is your risk tolerance, right? If you want to be something that's a little more consistent and more stable, maybe an index is for you. If you have your $1,000 and you don't mind losing it, and you're okay with being aggressive, maybe cryptocurrency is what's going to be right for you. Okay, so let's take a look at typical returns for these asset classes. So the first thing we have here are stocks, and now individual stocks can vary a lot, right? You could lose money, overall in the year on an individual stock, where it could be something like Tesla where you make a couple 100%. And so that'll vary. For bonds, I found about 5% for US long-term government bonds, as a typical return, which is a little higher than I thought. Down in the description, I'll put links to where I get all this information so you can check that out if you want to. Next, we have indexes. We'll call indexes the stock market in general. And typically, it's about 10% annualized rate of return. Now, if we jump down here, precious metals, that's going to be roughly 3 to 5%. Now, precious metals tend to not perform very well long term, but they have their own place in time. All right, the next one that we have is real estate, and I divide this into two sections. So we have appreciation and then investment. Now, appreciation will depend heavily based on where you're located. Typically, in the United States, we could say 3 to 5% is typical appreciation for real estate properties. If you look on the investment side, that's going to, also heavily depend on, how you structure the deal and how you finance it, and how much money you have in versus what you're able to cash flow or profit off of a deal. You could lose money on it, or you can make 10 or 15%, depending on how you structure your financing of it. Next thing we have is cryptocurrency. So the 10-year annualized rate of return for Bitcoin is 230%. And I would almost take that with a grain of salt, because, past performance doesn't necessarily indicate future performance, although it's something to take into consideration. And, I wouldn't assume that I'd be able to make 230% on Bitcoin if I invest in it, 1 year from now, or if I invest in it today and 1 year from now. And so I would just look at it as, okay, that has a little more opportunity than all these other investments here, but it's also a lot more risky. Okay, so if I had $1,000 to invest, this is how I would do it. So the first thing that I would look at are, what are the factors of the current, economic environment that we're in. So right now we're experiencing a lot of inflation. Now, typically inflation is about 1 to 3% every year, calculated using the CPI. And for 2021, it's actually 5.3%. And the CPI, I don't think it's a very good measurement because it doesn't include the price of, investments like stocks and bonds. It also doesn't include the rising prices of energy and food, which is actually kind of hilarious because that's like such a staple, and something that should definitely be included in inflation because that's like a necessity. Anyways, I digress. So more recently, I've been getting more and more into cryptocurrency, and I'm not an expert in it by any stretch of the imagination, but I know enough about it to recognize the opportunity that exists there. And so if I had $1,000, I would do a 50, 30, 20 split between Cardano, Ethereum, and Bitcoin in that order. And now this is kind of a heavy allocation towards Cardano, but I think Cardano is going to outperform Ethereum and Bitcoin. And again, this is no, investment advice. Don't do anything that I say here. This is just educational purposes only. And again, when I am investing, all the money that I invest, I'm okay with losing it, okay? This isn't money that I need to pay rent or buy groceries or anything like that. This is money that I'm okay with losing. And so I'm okay with being a little more aggressive, right? Investing in cryptocurrency rather than the stock market. And especially because, in the current economic environment, and in my opinion, I think that Bitcoin and cryptocurrency in general is going to continue to outperform the stock market. And so I think that my money is safer and better off being in something like cryptocurrency than the stock market. And how I would treat this investment in cryptocurrency is if I'm able to double or maybe even triple my money, I'd say hallelujah, I'd take it out and I'd go do something else with it. So the other way you could go about this is investing in your purpose. So this is going to be typically an investment in yourself in specialized knowledge, a skill, or education that's going to be able to make you more valuable out in the job market, to where you could make more money later on. So, typically this is in the form of degrees or courses, maybe a seminar or books. And these operate along the lines of utility, right? Or even equipment. That's a good one if you want to start a business, $1,000 for equipment or whatever. So these operate along lines of utility. And so however valuable these things are is going to be what's going to allow you to earn more money in the future with that specialized knowledge or training. Okay, so to give you an example here, say, in 3 to 5 years, I really want to become a real estate agent and I want to make between $60,000 and $80,000 a year. And I have this $1,000 and I'm like, okay, it's more worth putting that into becoming a real estate agent and potentially doubling it in cryptocurrency or whatever investment I choose at the time. So depending on where you live, you could get your real estate license for less than $1,000, but it's probably going to be more like 1 to 3,000 to get it done. But anyways, we'll just run with this example. So say I currently make like 40 grand a year, and if I invest this money to be able to get my real estate license, I could be able to make 60 to 80 grand a year. So that's a pretty worthwhile investment. I'm not going to see the fruits of that labor until later down the road when I have my license and I have the experience and I'm able to sell homes. So that's something to think about. All right, so for me personally, if I decided that investing this $1,000 into something related to my purpose of something I want to accomplish in the next 3 to 5 years is more important than just solely for the purpose of accumulation, this is what I would do. So I'm a college student. College is expensive. I would put that money towards paying off my student loans, right? I'm paying for college myself. Now, $1,000 is a pittance, right? That's like maybe an interest payment. But anyways, if that was something that I decided was more important than, something over here of accumulating money, that'd be the first thing I'd go for. The next thing would be, if I didn't already have it, is an Audible subscription. I'm a huge fan of Audible. Audible is about $15 a month. Over the course of the year, it's $180. And if you buy, 50 to 60 books, you're probably going to get pretty close to $1,000. And the cool thing about books, or at least in Audible, I'm not a fan of reading too much. And so that's what is nice about Audible, is you can just listen to them. But you can improve your skills so much to make more money in the future from the stuff that you'll learn from books, right? Someone spent 20, 30 years of their life, maybe their entire life, of learning these things that made them more money or made them more successful. And they put it into a book that you could buy for, less than $20 and get all that information in just under a couple hours, and then apply it and use that to make more money. It's kind of crazy, right? If you read a book that teaches you how to negotiate a raise, and maybe that's a $15 book, teaches you how to negotiate a raise, and you're able to make 10 grand more a year because of the things you learned in that book, that's a worthwhile investment. All right, guys, thank you for making it to the end of this video. If you haven't already, click that like button and consider subscribing if you haven't already. Take care.